you're an S-Corp owner, how you receive your income, whether reasonable compensation or as a distribution, is going to cost you thousands of dollars in taxes if you don't do it right. So if you're an S-Corp owner, please listen to this. Hi, I'm Cameron, and I run a company called BizBud, and we help entrepreneurs, small business owners, save the most money in taxes through proper tax strategy and planning throughout the year. In this video, we want to talk about the difference between reasonable compensation and distributions, particularly as it pertains to an S-Corp owner. So we get this question a lot. How much salary should I take as an S-Corp owner? And that's a good question to ask, because as an S-Corp, you don't pay what's called Social Security tax and Medicare tax on the full net income. That is why an S-Corp is valuable. You hear a lot of videos on the internet, become an S-Corp, but why you save money in taxes? Why should you become an S-Corp? We talked about it in the other videos, but really one of the big values of it is you don't pay that full 15.3% of that self-employment tax or Social Security Medicare tax on the net income. So with that, you need to determine, okay, what do I pay as a salary? Because ideally, if you make 100 grand, let's say, in net income in an S-Corp, ideally, you would just take it all as a distribution. Unfortunately, you can't do that because the IRS has rules saying that you have to take some salary. And what that salary is, they say reasonable compensation, which can be up to determination or, at some level. So there's different theories on what is reasonable. Is reasonable a third of the net income? Some people out there would say, some CPAs that say, okay, just take a third of the net income. So if you make 100 grand, taking 35 grand in salary, okay, that's reasonable. Some people would say, you go on Indeed or Glassdoor or you research in your area. So if I live in Miami, then I would go, okay, and let's say I'm a graphic designer in Miami. I would say, okay, what's the average salary of a graphic designer in Miami? Okay, you would look that up. You get, let's say, 70 grand. And then, okay, you got 70 grand, and you would save that in your files, and that's how you determine your reasonable compensation. Then lastly, you could pay someone like us or some CPA or someone that runs like a really in-depth study. They use expensive software. They look at the tenure of your career you've been doing this, where you live, what decisions you're making, how much time you're spending on it. And then it gives you an exact down to the sign audit-proof number that they would say with the exact salary amount based on your situation. And you would use that number. So those are the three main ways we have seen from studying thousands of hours and talking to hundreds of CPAs and attorneys and everything. So which one do you decide? And how it all comes down to your preference. Each person would say that we talk to that believes in their way that way. From our perspective, we've done hundreds and hundreds of these S-Corp returns, and we've talked to top attorneys, CPAs that have also prepared them for years and years, longer than some of you have been alive. And they haven't seen the specific payroll reasonable compensation audited as long as you are taking something within, they would say a third, some people even say a fourth. So if you just want to catch all, this is principle, it's not law, I would say, but if you want to just make sure that you're doing something, take a salary. Fill out the W-2, make sure it's, some people would say consistent throughout the year. So you're not just taking all at the end of the year, but all at the end of the year is better than nothing. And pay yourself something, because if you have zero, that's gonna trigger the IRS audit. That's gonna be a red flag. So you want to take something. So once you've done something, let's say in this $100,000 example, let's say you've just gone, for the sake of this video, we're just gonna say you did a third, and so you're at, like, let's say $35,000. That's your salary. $65,000 after that, you're not paying any self-employment tax on. You're not paying any of the 15.3%. So that comes to you all tax-free. That's where you get your big savings. That 35 grand, you're paying that self-employment tax on. So a lot of our clients ask us, okay, I'm making more money now. I need to raise my salary. And we're like, well, why do you need to raise your salary? Because raising your salary just means you're raising your tax. We've already set your salary at that amount, and we have a justification. We have our reasons for that. So that's set. Now, if you're like killing it and you're tripling your net income and quadrupling, okay, maybe raise it. But if you're just making a little more money and it's not, then don't take a higher salary. Just transfer from the business account to your personal account as a distribution, because the distribution you don't pay tax on. So when a lot of our clients ask, okay, I need more salary, I need more money to live, which is true. Like a lot of people, you're not going to live off of 35 grand, then yeah, just transfer from business to personal. Don't take a higher salary because you're just paying more tax. And you're not necessarily decreasing your audit risk. So if you're in that situation where you're like, oh, I need more money, don't default to I need a higher salary. Remember the difference between a distribution and a salary. Distribution, no tax. Salary, a lot of tax. So that's how it is. Another thing is the accountable plan reimbursement policy. If you don't have that set up as an S-Corp owner, make sure you do. And we're not talking about that in the video. And also look into the board meeting rents, the rental agreements, transfer money from the business to your personal for board meeting rents. But we've talked about that in other videos. But in this video, we're just talking about the distribution versus salary. So I want to make sure after watching this video, there's no more confusion or questions about the difference between why it's better to take a distribution over a higher salary because you don't pay tax on the distribution. So we get that you need money for living expenses, or maybe you just need money for an extra vacation or whatever. Just transfer out of the business unless you are actually making a ton more money. Then talk to your tax advisor, talk to your bookkeeper or CPA, whoever you're working with. If you're working with us, just email us and we'll make sure it's properly structured, your reasonable compensation to distribution, so that you are maximizing that tax savings and not increasing your risk, because that's the game you're playing here. So yeah, so if you got some value out of the video and you like it, send it to someone who needs to know the difference between the distribution and their salary and why you need to take one or the other. And we will see you in the next video. If you have any questions, please reach out to us and let us know in the comments what you think. Thanks.